Good day, ladies and gentlemen, and welcome to the show on this 22nd, Monday, the 22nd of February, 2021. Glad to have you guys here, and welcome. Now, listen, guys, there's something big happening in the financial system. Remember, we watch the MOVE index every day. It's a huge indicator. Huge indicator. There's things going on now. Now, Bitcoin, people poured out. Had a steep correction. Exactly the same time that they poured out a Bitcoin, and timing is everything. Watch the silver price pop. I think whoever poured out a Bitcoin probably poured right into silver, but they probably had to buy SLV because it was a rather large amount. They wouldn't have been able to get the physical right now. I don't think they would have been able to allocate. Maybe they're going to try to get physical delivery from COMEX. I don't know. Good luck with that. Probably settle in paper. So basically, they're pouring out. They probably didn't want paper. Here's the thing: they probably poured out a Bitcoin. They probably wanted to get back into another physical asset, another asset class other than Bitcoin that is, or maybe they're hedging, partially hedging. Like, in other words, maybe they're a big shark, a big whale, or whatever, and they dumped off a lot of their Bitcoins. And they probably thought to themselves, maybe I'll dump a quarter of my Bitcoins and allocate silver because they don't want paper, right? So they must have had to buy the SLV. Anyway, they drove the price up, the silver, at exactly the same time Bitcoin price dropped. Let's get in there and let's open up the charts right here and take a look at what's going on. See this pop in the silver price? It went up exactly from 27.40 to 27.80. That's a 40-cent pop in the silver price. Now, if we take a look at the cryptocurrency price, it's coordinated around the same time or slightly thereafter of the drop we see in Bitcoin. So Bitcoin dropped precipitously down to like 51,000. And now it's coming back up again. It's back up to 53.6. So they dumped theirs, Bitcoin, or maybe part of their Bitcoin. They dumped it. Profit took. I think they switched over into silver, bought up the silver, probably silver short contracts, SLV probably. They're probably hoping to take delivery. Standing for delivery, I imagine, probably, because the type of people who own Bitcoin think to themselves, hey, I don't want to be in the dollar. But they might get trapped in dollars there, that move. Because I don't think there's enough physical silver to go around now at this point. For industry, for bar and coin demand, and everything else, you know. So we're looking at a Bitcoin price of 53.6. It's bouncing back rather rapidly because those Bitcoins that were sold are being snatched straight back up into firm hands again. This is the way now with asset classes that are out of the dollar. There's only three things. Well, there is a few more, smaller ones, but there's three big ones out of the dollar. Gold, silver, and Bitcoin. I mean, yeah, you could go out and get copper or other metals. You know, there's other metals you can buy. Cryptocurrencies. There's other cryptocurrencies you can buy besides Bitcoin. But those are the three big ones: gold, silver, and Bitcoin. Now, you know, you can buy these other cryptocurrencies or you can buy other metals. It's the only ways out of the dollar. There's no other avenues. Otherwise, everything else is stuck in dollars. Buy stock market, you're stuck in dollars. You know, if you buy into bonds, you're stuck in dollars. If you buy any sort of mutual funds, annuities, it doesn't matter what you buy, it's all dollars. You know, and people don't realize that. You know, they're holding a lot of these different asset classes, and it's dollars, but they don't know that it's dollars. It's still the paper funny money market. But there's a big problem today in the system right now, and I'm going to get to it. Going to get to it in a minute. So the silver price today, 27.77. It's up 50 cents. Take a look at gold. Gold is 1809.90. It's up $25.30. See, they might have bought gold too. Because that was a big move out of Bitcoin, and I'm thinking that they moved directly into gold and silver. That's what I'm thinking, because gold and silver popped at exactly the same time that the cryptocurrencies, and the type of people that hold cryptocurrencies, they want an asset class out of the dollar, and there's not that many avenues. Follow the money. I think that's where the money went. So we're looking at a Bitcoin price of 53.4, and now let's take a look at the stock market, the Dow Jones today. The Dow Jones is it was down earlier. Now it's in the green again. It's 11 points up in the green, 31,005. It was down like 200 and something points earlier, but it's trudging upwards again, 31,500. You got to understand something, that these equities, this equity market, is being buoyed by this cheap, easy money, and the cheap, easy money keeps coming. It's going to keep buoying the equity market. It's when they cut off the spigot that the equity market would fall endlessly. It would fall if they cut off the spigot of money. But there's some sort of an internal problem within the financial system right now that's not really seen so much, but it's in there. It's a wrench in the machine right now. You know, you got your cogs and you got your wheels and you got your big machine chug, 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 and all these different wheels. There's a wrench that's fell down in there, and it's clanging around and it's hitting stuff down inside there. And I don't. That's what I see when I look at the financial market, and what it's showing is in the move index. So okay, crude oil today, 61.07. It's up 1.83%. No, $1.83. It's 3.9%. That's a big move for crude. That's a big move for oil. Up 61.07 today for crude oil. Bonds and rates. What we're looking at is we're looking at those rising yields again, but it's very insignificant today. But this is a problem for the Fed. This is a problem for the markets. I'm going to tell you what. If they don't do anything, the Fed, these are going to keep creeping up. This long end of the yield curve is going to keep creeping up until it splits the system wide open. If these yields go too high, we'll get a huge crash in the market. And this already, the creeping up of these yields, might be what's causing the insolvency within the credit markets. The creeping up of these bond yields might be what's already caused it, might be already triggering it, and we might be seeing it in a move index today. So we're looking at rates, U.S. 10-year at 1.34. See, that's getting too hot. It's getting too high. It might be what's causing the problem in the credit markets. U.S. 30-year is at 2.14. It's getting too high. It's getting too high for equities, too. It's going to peak equities if these bond yields get too high, and they're getting a little bit too high. So what's the Fed going to do about it? Believe me, they will react to this. And I don't see any other way out. They're going to have to do what's called yield curve control. Which means what they're going to do is they're going to start to control the whole yield curve, not just the short end, not just those 1 month and overnight rates and everything else, but start to move out into the 7-year, 5-year, 10-year, 20-year, 30-year. They're going to have to move out and control those and bring the yields down on those. That's called yield curve control. The second they do that, guys, you watch gold, silver, cryptos pop up to the upside. They're going to shoot up. I mean, gold could shoot up $100 overnight when they do yield curve control. Silver could go up to $50 when they do yield curve control. And I don't see any other way out of it for them right now at this point. This is a sore spot within the financial system that needs salve put on it. And so the Fed's going to have to put that salve on it. And when they put that salve on it, watch what happens. So if we're looking at the move index today, you guys remember when it was going along here at about, I don't know, 40 something, 40, 45, 43, along in there. I wasn't saying anything, and I was bringing this on my show every day and showing it to you. And I kept telling you guys, If this goes over 75, we're in big trouble. Back when it was in the 40s, I kept telling you guys. It goes over 75, we're in big trouble. Well, it's shooting up, and it's heading towards 75 really fast. And this is an indicator that there's something seriously wrong in the credit markets right now. And that's the big one. That's the one that sent us over the edge back when they started all the repo crisis. It cost them trillions and trillions they had to lend out in the overnight market and stuff, in the credit markets at the overnight window. You know? And now it's starting to freeze up again. And it's going up fast. It says 75 is a marker on this. But it's already in trouble. The fact that it's moved up from the 40s up to the 60s shows me that it's already in trouble, even though it hasn't reached 75 yet. But when I say 75, I mean big problems. But it could shoot up over 100, just like that, when it's going up like this. You know? And they can't let the credit markets freeze up. You know, it's like the dam is breaking in every different spot in this whole thing. You know, it's like they run over and they fix one spot, make a quick repair, and then break someplace else, and they have to run over there. That's the financial system right now. Everything's starting to break. And it's all a problem is the way it's set up originally to begin with. It's a Ponzi scheme. And we're at the end of the Ponzi scheme, guys. Let's take a look at the dollar index today. 90.17. And the dollar's fallen off today. So now let's see what Von Greyers has got to say. You know, he's a pretty smart fella. It says, the Greek goddess of misery and poison is exerting a major influence on the world currency currently. And sadly, the dosage of misery and poison will increase in coming months and years. What now is crystal clear is that an excess dose of fake assets and fake liabilities will totally poison the financial system and the world economy. As Paracelsus, a renowned 16th century Swiss physician, said, all things are poison, and it's the dosage that makes it either a poison or a remedy. When a world already in trouble was hit by severe financial crisis in September of 2019, the dose of debt was already excessive. But the Fed and the ECB opened up the money spigots fully. They filled the world with poison or fake money. By the team of Biden and Yellen will now certainly finish this process with their prolific spending plans. Major central banks' balance sheets are up 6 times since 2006. All this toxic assets. And it's all connected to the dollar. The only thing that's out there right now that's not toxic is asset classes that don't have any counterparty risk and are not connected to the dollar. In other words, they have value separate from the dollar. And those asset classes are metals. All the metals. Any kind of metal you want. I don't care if you got a junkyard and you got a yard full of aluminum. You've got it made. I don't care if you got a scrapyard and you got a whole bunch of copper wire. You got it made. You're going to make it through this crisis. You know, if you got 24,000 pounds of copper wire, you're going to make it through this crisis smiling. Any metal, but especially gold and silver. Metal is the thing to have through a crisis like this. Metal retains its value all the way through history. It's retained its metal. Any metal. Doesn't matter. Even if it's steel. You got enough of it. You're going to make out like a bandit. Any metals. But the premier of the two metals are gold and silver. Those are the premier metals. Those are the money metals. Actually, gold, silver, and copper. Copper's a money metal too. These metals have been money for thousands of years. Copper is a money metal. The penny. Copper. Money metal. Silver's a money metal. They can try to make these not money. these premier metals, it'll never work. They're money. Okay, and now we got another asset class that has no counterparty risk and is separate from the dollar as well. It's new. It's a new asset class. Started in 2009. And it's very similar. Cryptocurrencies. But not all cryptocurrencies. There's thousands of different ones. You can get on some of these cryptocurrencies that are way out in the list, number 843 or whatever, and it might just die and you lose all your money. So you got to be careful. You got to, with cryptocurrencies, you got to stay close to the tree trunk. Now picture a big tree, a big oak tree, and you got limbs coming out, going way out, You climb out too far on that limb, the branch might snap, and down you go. You're going to fall down and hit the ground. That's if you go too far out buying a coin that's like way down on the list. Stay close to the trunk. The trunk is Bitcoin. That's the trunk. Coins, excuse me, coins that are closest to Bitcoin. You know what they are. They're like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right in those top coins. Then you're fairly safe if you're close to the trunk. You're not going to fall off and fall down and hit the ground. So this is what it is. We got a corrupted system. It's corrupted with too much cheap, easy money, and they're pumping more cheap, easy money. And the whole thing is at a certain point going to start freezing up and locking up, and they're going to have to unlock it with more cheap, easy money. And every time they unlock it, the money's going to become worth less and less. And ultimately, we're going down that road where the end is zero. It's all worth zero. And so there's going to be a mad panic at a certain point where people are going to try to get into metal, any kind of metal, and they're going to try to get into to the top cryptocurrencies. It's going to be a mad panic. And that's where all the money's going to go. All of it. All the value of the whole world is going to be transferred into these things. And it's going to be such a bad situation that if you got an old radiator, scrap radiator sitting in your backyard, the thieves might come in and try to take it from you just for the scrap metal in it. Because it's going to get to the point where metal is the only thing of value, and you can't buy food unless you got it. And because if you got the regular money, the dollars, it ain't going to buy nothing. I mean, you're going to get to the point where, well, I'll tell you this way. You used to go to the grocery store, and for like $50, you could pretty near fill your card. This wasn't that long ago. I'm only talking like 15 years ago, and now it takes like $500 to fill the cart, And so the $50 now or whatever is only going to fill that little section where the kiddies sit. The little section that you swing in the cart, you swing forward, and the kids sit down in there. It's only going to fill that now. But this effect is going to get worse and worse until in the end, the $50, it ain't going to even buy you one grape in the grape section. That's where we're going. And by that time, the metals will have went up in price. All these metals will went up in price, and cryptocurrencies will still be going up in price. They're on the elevator going to the moon. All of it. Gold, silver, doesn't matter which side. I mean, whoever had those bitcoins today probably and traded for silver, it doesn't matter as long as he can get real physical silver with that. It doesn't matter whether you're in paper or not paper, whether you're in the cryptos or you're in the gold, silver, and metals. Doesn't matter. All of that's going to the moon. That's all in that elevator going to the moon. What's going down to the basement, and I'm going to be going down really fast because the Federal Reserve is going to be cutting the cable, and it's going to go into Freefall. Right now, the cable's been shredded. There's just a few little strands left, and we got Janet Yellen there with a big pair of snippers going snip, 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 trying to cut those last few strands and let the cable fall. Let the thing go down to the basement. The elevator go down to the basement in a free fall. Honest to God, that's where we're going, guys, with this. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.